Welcome once more to PDT Academy. Here is Professor D, and we have been receiving in the Academy on Telegram requests that on trend-based Fibonacci. A lot of people still have difficulties using it, even though it's a really simple tool, and I will try my best to break it down today. I'll try my best to break it down to you guys. So this is the point. It's important you get these steps on how to use it, because sometimes I see some screenshots in the academy well placed, but just in the wrong timing. The first thing you want to do is you want to make sure you're not using the trend-based Fibonacci during market reopening, during news release, right? You don't want to use it when the New York session is opening. You don't want to use it, you don't want to place it when the London session is opening. You don't want to use it. You want to wait for market to take a structure. You want to wait for market to balance from fundamental news, right? Before you place your Fibonacci. Because if you do that, your technical analysis is not going to help you when fundamental stuffs are going on. It won't help you. That said, the next thing you want to do is you want to know the overall direction of that market. That's my advice. You want to know the overall direction of that market, meaning you want to go to a very high time frame, very high in the sense of you go to a daily time frame, weekly time frame, or whatsoever, and you want to check where is the market going to. So in this case, I'm on GBP USD, pound dollar, and we can see that pound dollar is on is rally. This is an uptrending market since 2020 March. From the drop, I guess this should be, yes, this is the corona breakthrough. This is the lockdown breakthrough caused this. And since then, we've been having this, right? So we can tell that this market is constantly buying, right? So we want to look for buy opportunities will be the best thing for you to do. Trading a swing trader, taking a trade for a long run. And if you actually place your Fibonacci on a daily time frame, you are thinking of staying in this trade for at least times 3 to 5 of days, right? So that being said, I would advise to place your um, Fibonacci, trend-based Fibonacci to be precise, depending on what you're trading. Don't place it too high and also too low. That being said, first things first, you want to check the overall trend of the market. Secondly, you want to go to a less um, a smaller time frame, whereby, very important, whereby the market has taken structure. Market has taken structure mean you want to have this higher lows, higher highs, or you want to have lower lows. I mean, market has a movement, okay, good and fine. Market is up and down, creating W's and V's, right? This is creating W and M. This is an M, another M. Then we have the 1, 2, 3, 4 here, W. Just want to have market taking this structure. When you found that, great job. For a buy opportunity, now listen, for a buy opportunity, your first point is a high, your second point is a low, and your third point is a high. And for buy opportunities, always remember you have 2 highs and 1 low for a buy opportunity, right? For a sell opportunity, you have 2 lows and 1 high. This is a sell opportunity. You have 2 lows and 1 high. Great. With that being said, it means for sell opportunities, you begin with a sell, with a low, you go to high, and you come down to a low as well. Good and fine. We have some few examples here I prepared. Let us assume the market is right here at the moment, and this over here has not occurred, right? So the market is somewhere here selling down, and we've noticed, okay, good, great, and fine. This is the structure. The markets keep buying and keep buying. So we want to wait for the market to actually buy and start dropping. When the market start dropping, well, in this case, market has bought, created first high, sold, bought again, and has started dropping, right? We now want to see where will this market drop and start retracing, right? So that said, listen, we know that market has been buying, market has dropped, created the low, bought again, and market has started dropping again. So now there's a question, where will the market sell to and start buying? That is what we are looking for, the trend base, right? That being said, you take the trend base, I'm on trading view, you go to this point right here, this is the mouse, you go to this third point here, and you want to select the trend base Fibonacci extension right here, right? The first point will be the highest high at that moment, which will be this, right? The next point is a low, which will be the lowest low. In this case, it is going to be this. It's not going to be this, but this, because this low is lower than this low. And secondly, it is not this low, even though this low is lower than this. Why not this low? Because from this A point, from your A, your next point should be a point in the future. Your next point should be a point in the future. So it will be this, not this. Please get this right. Click here once and you try to be as exact as possible. We are not taking the candles, we are taking the candlesticks, right? This is the next point. Click on it, dot. So your next point is as well in the future, which will be the next highest high when market started retracing. It will be this point. It will not be this because this high is higher than this high. And it would not be this because this high is higher than this high, right? So that's how you place your next point here. And what do? That is actually your Fibonacci. So this is your A, right? Nice job. This is your B, right? Nice job. And this is your C. Simple. And you can actually spread this out, like spread this out. Great. In that case, your entry point is going to be, no, let's take it like, your entry point is going to be the 100 level. Somewhere you're right. Good. So the 100 level is, let's look at this. You see these numbers on the side, this is 0, this is 0.236, this is 0.38, whatever. And right here we have just 1. Not the numbers in the bracket, but the numbers before the bracket, not the numbers here in the bracket, the numbers before the bracket. So this 100 level is your execution point, your entry for the buy, right? That said, this is where you execute the market for buy, and you have this. Go and find market respected the trend base and go. Is it possible for market to still come to this level and keep selling and never buys? Yes, it's possible. Is it possible for market not to even reach here? Yes, it's possible. That is why I'm saying you should look for market that has structure, because when market has structure, it tries to be what's the word? Let me just show what I mean. Look at this. From the A point, I think it's symmetric. The A point to the B, right? Look at this. The A to the B is equivalent from C to your entry zone. See this? It is equivalent. So you want market to actually have a structure. I don't know if it is symmetry or whatever it's called. Sorry, my English language, my English vocabulary is not that great. That being said, this is it. Right. Sorry. That being said, this is how simple the trend base can be, right? That is it. So this is your entry point right here. And you could target, the beautiful thing is, look at this. You see where the next zone is exactly at your B point, which would be your TP1. I would advise you to take this as a TP1. Your TP2 will be the next zone. These are the numbers already written here. Because the entry here, it's very simple. You don't need to come and start reading here, but right here on the left side in brackets is the entry. It's actually priced at this level. Here will be your TP1 here, your TP2, your TP3, based on how long you want to take this ride, right? Simple as that. Good example, and that is how it is. For a sell opportunity, I'm going to give multiple examples in order. 1, 2, sell, sell, sell. This is another cell here, right here. You see up, down, keep rejecting this area. So trend base A point, the sell, B, sell, extend, market came, hit and sold. Simple as that, right? This is your A right here. This is your B right here. This is your C right here, right? I just extended it. This will be the C point here, but I just did this. Just spread it out, stays the same. This is your entry zone. When your entry point will be the 100. That is actually the point the gray zone ends, right? You guys see this is good because these things are in color. The gray zone actually ends here. So, and where this gray zone ends and this blue begins, that is where you execute your trade for a sell. Great job. And look at the same story here. From your A to your B, right, is equivalent, to your C to your entry. Simple as that. It's a good job. That's good. That's great. So that being said, just give me a minute. So that said, we are right now on BTC USD Bitcoins, and there is a nice trade here for a buy. Let's look at this. So the first thing that I'm going to do is, what am I going to do? The first step one, I want to look what Bitcoin is doing overall, right? And I think we can all say this market is buying. Bitcoins has been buying. Great job. So what are we looking for? Step two, buy opportunities. Great thing. First of all, for those who were with us in the academy, we could have taken this trade. Okay, I actually placed this, but never came to entry. I sent this some time ago, but never came to entry. That being said, right, market has already started buying and buying, so this trade is not valid anymore because there are new structures in the market. That said, what I would do is this. What I've done is this. I'm on 2 hours time frame right now on BTC USD, right? Good job. I'm checking this local area on BTC, on Bitcoins. So that said, this was the first high we took, the second low, the first high, the low, the high, and it dropped till this level did not give us a trade, right? So what we are going to do now is we are going to update this trade. I'm expecting Bitcoins to keep buying, but it has to drop the why. It still has to drop. The reason why it has to drop is based on the RSI, and the RSI video will be uploaded soon as well. So this is the thing. For buy opportunities, point A is buy, right? Our point B is the lowest point, right? This is it here. Great. Point C is the next high, right? Next highest high. It's not going to be this. It's not going to be this because it's higher. It's not going to be this. But this. Also not this one, but this one right here. The good thing is market has already started retracing down and down. So what are we thinking of? I'm calculating Bitcoins to sometime in the future, in some weeks to come maybe, drop till this level right here and then execute the trade, right? So this is trade I'm actually giving. here to here should be equivalent to this. So most likely, if market respects itself around February the 6th, right? February the 6th. From February the 6th, we should be calculating. So around February the 4th to February 8th, we should calculate Bitcoin should have dropped till this level in case Bitcoin respects this structure, because right now it's actually in a serious downtrend, right? Look at this. We are still on the trend-based Fibonacci, but sometimes using the basic is as well important, right? Placing these trend lines on your lower highs, right? Right here, and your lows. Okay, let's take this. Okay, we'll do like this. Just place. This is going to be the support zone. So this is the thing. We see Bitcoin is definitely this margin is getting smaller and smaller and smaller. Most likely Bitcoin is going to drop. We don't trade the sell. We are not trading Bitcoins on the sell. We trade Bitcoins only on the buy. That said, we shall wait and see when this trade gets active what we're going to do. And we're going to hold this trade for a while. And this is the point. The next thing on the trend-based Fibonacci is this, right? In case we are talking about Bitcoins right here, so it is very volatile. And in case your account is not too big to manage this pullback, because this is the execution zone, right? This is where we are thinking of executing Bitcoins, right? For those who have really huge account, if your account can handle this pullback, how many pips? Approximately about 6,000-7,000 pips, right? You could execute a trade from here, hoping to get this and then buy. But if not, this is the point. Important, listen, wait for the market as usual. Always say, wait for the market to sell, come into the execution zone for the buy, right? Wait for the market to create a solid support. The market has to solidify. When market solidifies here and creates a support, you don't execute the trade yet for a buy. You want to wait for market to pull back out of this battle zone, I call it, this consolidation. You want market to drop, solidify, and pull back out of this zone. When market has break back from this zone, that is when you want to execute your buy, right? So market will create higher highs and higher lows right here, or maybe even a support, and you want a resistance, and you want market to break that resistance out of the resistance. And when market has done that, you can execute your trade for a buy on Bitcoins in case Bitcoin actually keeps dropping, because I expect Bitcoins to keep dropping based on the 1 week time frame and checking the RSI, right? RSI, the market is still overbought. You see, about the RSI, there's a video on that. If you don't understand this, just check below. Previous future videos will be uploaded on how to use the RSI. That said, that was a great example on Bitcoin's buy for future trades. So in case you have any questions, feel free to hit us up on our Telegram chat room. The link will be placed below in the description. In case you have any question, feel free to hit us up there. This trade as well will be placed in this free signal channel, which is also going to be displayed below the subscription. And we're happy, and in case this helped you, kindly share the video to your friends and family. And that being said, we are going to see on Wednesday during the class, our live classes. We hold classes every Wednesday at 7 p.m. GMT +1. Thank you so much, and God bless you.